All right, good morning, everybody. Excuse me. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We got CPI coming up today. I called Verizon yesterday to kind of fix my internet problem. The other device should be arriving today or tomorrow, so hopefully next week everything will be fantastic. But moving forward, I marked out the measured move for today on the S&P 500. Of course, leaving in the fact that last CPI's high is over here. Now, I said this yesterday in the Patreon live stream, but I wanted to tell everybody, the public, that basically what we're looking at here is the S&P 500 got the last CPI print, which was higher. The core inflation number came in at 3.2%. We expected that based on oil. So it had a nice little run to the downside and set this low right here. Then it traded all the way back up, took out the previous high that was made by the CPI number, and then kind of just rolled over. All right, now this rolled over and set in this low right here. And if you can see, this is pretty much the middle of the range. So we have set in a low around the middle of the range. What our objective is today is pretty much this. We know that they are expecting a higher core or a higher inflation number, right? The headline number to go from 3.2%, which was right there, to basically go to 3.6%. That's based on oil. So the number that they're focusing on more so would be this number here. Now, last month we had 4.8 and we got a 0.1% drop to 4.7. The market did not like the fact that the headline number went up, and the market did not like the fact that we only got 0.1% drop. So the market traded down. And that did have a retest. It did trade all the way back up to CPI, but then dropped from there. So what we're thinking is if we get a number that's 4.3 or lower on core, and this number comes in as expected or lower, the markets will react bullish to that, and we will sell puts. Got tastytrade pulled up right here. We're gonna sell puts on the /MES, which is the micro contract of the S&P 500. All right, we're gonna sell them. We'll sell them out far, basically trying to get as much premium as we can, but we're gonna sell them close. So yeah, that's what we're gonna do. Bitcoin is essentially traded up yesterday, rejected resistance, and this morning it's up on the day again by 1.29%. So nothing really major happening there. Yesterday's short would have been obviously wait for the last week's high to get taken out or shorted at resistance. You have two different places. This is last week's high. That's daily res. But if you did, obviously, the traders came back to you. All right. So will it give us an opportunity to short it today? I don't know. It's already ran 1.29% from the open, and I don't like to buy things at the highs. All right. I would have much rather been a buyer upon down here on the breakdown, but I was expecting much more breakdown, not just this little bit. So what we're thinking is it's probably going to trade back down at some point. So any swing high it gives us above last week, I'll potentially look to take a short with the coin in margin futures contract on Bitget. If you are in the US and you cannot use Bitget, there is a link in the description for Weeks. It is another exchange that will accept US customers. All right, so you can put it in there. Also, if you use that link, you will save 20% on all trading fees, not just spot. You can trade spot, futures, whatever you want, and you save 20% on all fees. There is also a link in the description for tastytrade. The reason that I'm using tastytrade is because it's a small account. I deposited $5,000 into it. tastytrade gives you the ability to trade options on futures, and it also gives you the ability to sell premium with much less buying power. So like to take the same trade on the S&P or on Thinkorswim would be much more expensive. You would need a lot more money in your account essentially to do those trades. So if you want to trade options or futures, because I have been trading futures, this is the MES right here. So it is the S&P futures contract right there. It is my buy window, sell window. If I want to sell to open, I just click that. Buy to open, click that. Here's the contract size. Right now, we've got $3,000 worth of buying power. The account is up. P&L year to date, $904. In reality, if we go over here to history, you will see that. Hang on one second. There's that. All right. So let me pull this over here. And let's go to date filter to year to date because the account was opened in July. All right, so year to date count opened in July, so 6 months. You can see minus commission and fees, the amount of profitability that I have already achieved in this account is 20%. Now the S&P 500 is setting at 16% right now, so we've already beaten the S&P 500 in just 2-3 months. All right, not bad. A lot of commissions and fees, but most of those commissions and fees are taken when I do these trades right here, which are in and out scalps on the S&P 500 E-mini futures contract. They charge 85 cents and then 67 cents. That's with one contract. All right, one contract. If you use more than one contract, the fees are going to be much more than that. I'm going to try to find the one where I bought two. Right here, you can see that if you buy two, it's double essentially what you paid up here, right? So there you go. But I mean, if with $5,000 and trading futures, if you know how to trade, there's no reason why you can't bang out $50 to $65 a day, right? $50 to $60 a day, which obviously will grow a small account pretty rapidly. Now it says that we're down on the day $10. I don't know why. I haven't taken any trades. So that's probably just based on the open positions that I have right now currently. We got 1 minute until CPI comes out. We're not rushing to do anything for it. All right? So I'm not rushing to blast off with a trade here. We know what we're looking for. That will determine our trade. Oh, we're going down. So let's go see what it says. No, I want here. Economic data. All right, so core came in at 0.3, which is higher. It came right in expectations at 4.3%. This is good. This is bullish. Only the headline number came in lower or higher, which is not bullish. But this is based on oil and food, right? Oil is the main reason why this number went up. We've been talking about it for the last 2 months since oil made its rapid rise. But this right here is what's causing the market to be bearish right now. The problem is the other number came in decent. 4.7 to 4.3 is the biggest drop in core inflation that we have got in a long time. Here is core inflation. You can see 5.5%. And then it jumped up to 5.6, 5.5, 5.3. So it's literally like just been dropping a couple tenths of a percent. But now from 4.7 to 4.3, that's 0.5 of a percent, 0.5%. Not bad. Excuse me. So that's actually good news. So I can only assume that the market's taking this bearish based on the headline number. Which is definitely, not good. This is going to be bullish for the dollar. Anything green like that means it's bullish for the dollar, and the dollar is taking it bullishly. Yesterday, we took a long trade on the Euro USD based on the dollar pulling back into daily supply right there. That is where we took our short entry on the Euro. I'll pull it up right in here, and that trade is going to get stopped out. We did take profits on it yesterday, moved our stop to break even. So that trade is probably going to get stopped out, but we already took the trade and already made money on the trade. Bitcoin is pulling back pretty rapidly on the hourly. You can see it didn't make a nice little spike to the downside, but this isn't really nothing major. If you want to buy Bitcoin, if you come back down in this region here, you could look to buy it. Make sure your stop loss is set to be like no more than 2% of your account. Availability, like however much money you have in the account, that is your funds. That is your liquidity, right? That is your equity. You don't want to risk more than 1 or 2% of your equity ever. Let's go look at the futures. So we still got a nice pop to the downside. Now, I drew out on the S&P 500 over here where the expected move is. So down here is pretty close to the expected move. The expected move today on the ES minis was around $27. $27. This is the expected move high, and this down here would be the expected move low. So if the S&P 500 finds support here, then we would expect it to get higher than the expected move high. So there is a way we can do this. All right, so this candle is the open right here. What we can do is we can pull up this. And let's get our magnet tool. Sorry about that. It's got to be precise. So 13, 15, 27 is right in there. And then we'll do the same thing from the open up. 27. So that's pretty much good there. So there's our expected move for today. All right. So the markets are generally pretty good about keeping that kind of stuff in check, because when you breach expected moves, then a lot of people get hurt, more than likely, because a lot of people are selling puts and calls just based outside of the expected move on the per day basis. If you are a per day trader. Now, I also have a tool that shows me the expected move on a weekly basis right over here. And you can see that we are basically trading unchanged on the week. This black line is where we started. So expected move to the downside is, and this is adjusted for the adjustment that happened this week. We have triple witching happening on Friday. So let's see here. We'll call it 458. Or we'll just call it 58 and 69. So 58, 69. That's what we're kind of looking at to be the top edge of the expected move. You can see that it's given back the majority of that move. In fact, it has given back the entirety of that move. So I do believe that the market should take that news as bullish. That core number is the one that's been so sticky and giving everybody trouble. So probably should have bought that down wick. We'll see if we get us a pullback. And if we get a pullback, we will take the trade. Like I said, this is real money, so I don't want to be stupid with it. All right, we are basically testing the VWAP right now on both the NASDAQ and the ES minis. The ES mini is above the VWAP on an intraday basis. So we'll look for a pullback once it gets, once it does its thing. Let's get rid of this because this is no longer needed. This is not, it was yesterday's expected move. And it did trade much lower than its expected move yesterday. All right. I think once we got around in here, we were hitting the expected move to the downside. So it did end up ultimately breaching and trading much lower on the day. And then we're still kind of like down there today. Now, the SPX 500 is a CFD product, so these prices do not match the ES product, okay? You can simply see it right here. This thing is still trading in the 44s, whereas on the ES, we are in the 45s. The reason for the jump up to 45 was simply, it's based on the fact that the contract, we are no longer using September futures. We are in October now, so we're using the October. October will be your front month contract. So it did cause a little jump in price from 44.90 up to 45 something. But I have fixed all that on the chart. Yeah, the DXY is plummeting. So buying Bitcoin is probably a decent idea. It's too late, actually. Sorry about that. That's the way it works. Like I said, if you want to buy it while it's down here. That's your pullback, because that 4.3 number is good news. It is really good news. That's the number that the Fed's been worried about. So if now we start getting lower prints on that, then the market's going to go ahead and predict that the Fed isn't going to do anything next week. They're just going to pause. They're going to be data dependent. They're still going to be very hawkish. However, they're not going to hike, right? That's what the market's pricing in. We can go over here and look. The CME group is the people that use the Fed Watch tool, because they use futures and bonds and everything else, yields, to determine whether or not we're going to hike, and we're not. Our current target our current target rate is 525 to 550. That is where we are. This is if we hike. That's what would happen, right? If they just hike 25 basis points, which is not expected. So the market should overall take this as bullish. So how are we going to trade that? Well, we're going to go in there and we're going to sell puts on a down move, which, we're kind of getting right now. And this will be a day trade. So the way we're going to do this is simple. We're going to go out 92 days, because that's where we're going to get the most amount of premium. Let me look on the daily time frame here on the other screen real quick, just so I can basically get a good idea. Let's say 44.20 right in there. That would be extremely close, right? Extremely close to where the in the money zone is. And this ruler right here and right here says that in this amount of time, the S&P 500 can move plus or minus that much. All right. So even though that's got a nice chunk of premium in it, as long as the market goes up today and not down, we can make a couple bucks. Let's go closer. Sorry. Let's see what we got at 30 days in the 44.20s or 30s. That's a nice chunk of change. So this thing will move very, very fast. We'll go ahead and place that. Oh, wait, let's get it in the middle. We want the midpoint. 44.20. It's really, really close. What I'm doing, basically, it's moving so fast it's hard to get it in on the midpoint. Wait. No, I don't want to do that. That's in the money. We want to sell out of the money. No, puts is what we were doing. I did the call side. I'm an idiot. Give me a second here. I'm an idiot. Yeah, you definitely don't want to sell in the money. You'll get filled instantly and then automatically get killed. That would be terrible. All right, so 44.20s right here. Yeah, that's more like it. All right, good. All right, so the maximum profit will be $173. That is a put. We'll try to get filled on the midpoint. All right, so that's that. So let me show you on the chart why I'm choosing 44.20. The price won't be right on this, but it's just getting down underneath this wick low right there. Right? The actual ES futures is 44.13 this low. So if we just got filled on the trade. So if we have an update today, if we go back up to take out this high, which is your CPI high, the new CPI high, then the put will make money. If price continues to drop because the market takes this as bearish, we will lose money. Since we're 30 days out, we got a time decay effect that will work in our favor. All right. Selling puts is dangerous because when you do crash, when you have market crashes, price moves down a lot faster than it does up, right? So that's why selling puts is very, very dangerous, especially in a trending market, because if it does crash, we will potentially lose. But that's okay because we're only going to risk 1% of the account. And right now, 1% of the account is $59. So I have the position up right there. There is the P&L. All right. If this gets red, 59, then we drop that position. We close it out for a loss, a 1% loss. But the trade price was at 34.75. To figure out how much money you can potentially make, you times that by 5. 34.72 times 5. That's 173.60 is the amount of premium that is available in that put. So what we want to see is we want to see the markets trend higher. Now, we're going to hold on to it. Big spikes on the DXY. I mean, you got big spikes everywhere over here. There's your DXY, big spike up to 104, and then it dumped. But as you can see, it is not a huge dump. And now it's trading right back up to, I guess, this platform calls this the open on the dollar, which is 8.15 or 8.20 would be your open. But it really opens the previous night. Here is your NQ right there, trading lower. And we can't trade NASDAQ, or we can't trade Nvidia or Tesla or anything like that, simply because the market's not open yet. But it will be at 9:30. And we still have plenty of premium if we want to take a day trade on one of these. If it was going to be one, it would be Nvidia, because Nvidia is the one that has fallen down under the 21 on the daily. Whereas Tesla is mooning. All right, Tesla is mooning. Tesla is above all major moving averages and was bullish yesterday. You can see Nvidia wasn't really yesterday. So all we've really done today, or that's yesterday, was what we did was we tested that supply area. That's where we were looking for shorts yesterday, but unfortunately we were unable to take the trade because it moved so quickly away. And then you closed up on the day, but just slightly. Well, you wouldn't have closed up on the day because you gapped down, but you did close bullish. So, but you still would have been down. So that they take it based on where the previous day's close was. So we'll go to Nvidia right here. You can see it closed down 0.68%. And as we know, Nvidia can move 5, 4, 3% easily, right? So being down 0.68%, that's 0.5%. That is not bad. You are gapping down around yesterday's low. Nothing major there. Well, like I said, we can't do anything on these until the market opens. Here's Tesla. This is what I'm talking about. I mean, there's your bullish structure. Your moving average is crossed back above the 55. So any hopes of it rolling over here were dashed on the day that it got really good news. I guess they're going to buy a lot of their chips from Nvidia or something. And then Tesla just gapped up on the day and ran all day. Yesterday, not so much. Do you see a trade on Euro USD? We took it yesterday. And basically, if you would have been taking it, you would have been taking it down here because this is the yearly open. I don't know why the yearly open is not popping up. So let me put the yearly open back up. So that Jan 2 is your yearly opening range. So I mean, if you were going to buy it, even though that it looks like you're getting ready to cross the 200, this is a bearish structure. You're getting ready to cross the 100 with the 55 EMA. So we can predict that as long as price continues and its trend that you're going to get that 55-100 cross and you're going to get that 21-200 cross. That's not bullish, that's bearish. But if you did want to buy it, this is where you'd be looking to buy it. It is the yearly opening range. So bulls will try to defend this as they want, if they want euro to close higher on the year. If they want euro to close negative on the year, then the shorts will be able to drive price right through there. Bitcoin's still bouncing around. I have some kind of line over there, and I don't know what line it is. So let's go see what we got. Why is Bitcoin trading around that line? What is that line? That is nothing. I think it's this old resistance level right there. So if we go back intraday, kill the moving averages. We only care about moving averages on daily and weekly time frames. Yeah, so this is the old daily res. It was acting as resistance until you broke out there, but it dropped right back down. Tried to get above it here, failed. Tried to get above there, failed, but ultimately did indeed break out, and we are trading above it. This is just last week's high. This is the resistance, 26,276 spot 30. It is daily resistance. So the question is, do we close above that today or not? You need to in order to have bullish continuation. There really hasn't been much bullish news out for Bitcoin as of late. And what bullish news we did have is gone. There's a lot of outflows on Bitcoin, so I think I would probably be more apt to shorting it than looking for a buy. So if on the hourly I can get another spike up to this price, I will sell it. 26,276 with a 2% stop loss. This is what it looks like on the 5-minute. So we'll see how it goes. A pretty decent size move to the downside to allow any buyers who wanted to jump in there to jump in on a pullback on the daily range. Intraday range, not daily range. Intraday. All right. But I would like to get a trade on in the futures as well. That probably would have been my opportunity, but we were trading under the VWAP there. See how we broke down under this purple dotted line is your VWAP. There's two indicators on here, ESD bands and the VWAP. The yellow and the pink is the VWAP. The purple is the VWAP. The blue, that is the ESD bands. It's just kind of like a Bollinger Band, but instead of having a 20 simple, it's got a 21 exponential in there. And you can see clearly that the dollar is continuing to break down. So we definitely want to be bullish on the ES, hence the short sell or the short put we took on it, right? We shorted this put down in here, the 44.20s. So if we close bullish on the day, if this thing closes anywhere up in here, we will be in profitability. You can see that when I opened the day, we were down 10. I was down $10 on the day. I'm setting at 239. So we are currently moving up as far as profit wise on that short put based on the news. So what I really kind of need to see here is I need to see S&P 500. And remember, we still got the open to go through, right? The open. So a lot of times you might get like a down move on the open. If we get that, we'll look to buy into the futures on the ES micro contracts. The E-minis, they're just too expensive and they move too fast for this size account. It was a 5K account. It's up 20%. So yeah, here's your NASDAQ. It's also blasting through. Volume weighted average price is the VWAP. Stocks really respect that quite a bit. I can show you here. Notice how right in through here, it took like 20-25 minutes for it to finally break down below the VWAP. Once it broke down below the VWAP, it pretty much stayed under it. All right. So if we get above the break above the VWAP, then any pullbacks back into it after the open would be, a potential buying opportunity. Is it going to get you in at the low of day? No, it is not. Right? No, it is not. But we could have bought the low of day because it took out yesterday's low. Or we could strike up a line on yesterday's low. Where is the low? 45.07. All right, so it says that the low right there, this is what I'm looking at. It says that the low on this candle was 45.07, but if I come down here, you can see it's actually like 405. $406. All right, so right there is yesterday's low, and it's right under the VWAP, so we can watch that area for potential bullish entries. We will be taking them on the tastytrade platform. If you do want to do the small account, and you want to grow it because you work for a living and you don't have $50,000-$60,000, or if you do have $50,000-$60,000 in savings, instead of putting your entire savings into a trading account, just put a small portion of it. I opened this account with $5,000. The minimum amount that you need to open the account with is $2,000 if you want to be able to sell options. Anything lower than $2,000, you will not be able to sell options. You will only be able to buy them, puts or calls. It doesn't matter, but you want to be able to sell options because selling options is the best way to make small continuing growth in the account. It's the best way to do it because you can find stocks out there that are trading sideways. You can sell calls and puts depending on how much buying power required for, say, the stock. Now, Tesla and Nvidia, you're not going to be able to sell calls or puts on Tesla because just go way out of the money here. It's going to show you that the buying power effect to take that trade is $7,627. As of right now, I only have $2,000 worth of buying power because I'm already in a couple short positions, short call positions. I think we sold the 135 call on the XLV. This is down $3. And then this is a spread, an in-out put spread, or just a put spread, or a vertical put spread. People have so many different names for these types of trades, but I will show it to you. It's right here, 30 days out. Essentially, we need price to move down. You can see the strikes move down. It's opposite to Thinkorswim. On Thinkorswim, the strikes move up as the ruler goes down, right? So it's a little bit confusing. I like to set it up this way because it's going down as it's going down, right? So what we need is this in the money line. That orange line, we need it to move down here for us to be fully profitable on that trade. As long as even if it gets in here, we'll make some money, all right? Because this put will have intrinsic value. Whenever your put or call is in the money, it has intrinsic value. When it's out of the money, it's called extrinsic value. So that's why if it expires out of the money, they expire worthless. But it's just a trade on XLF. XLF had a pretty big day yesterday. So you can see that position is down $20. Bitcoin moving back up there to resistance. What was I going to do? XLF. But yesterday, you can see XLF had a 1 day move, just straight up until 130, and then it rolled over. But that is, I believe, yeah, daily res. So it closed right at daily res, but we're gapping up this morning. So we may have to end up closing that trade out for a loss, but it's okay. It's okay to take losses. That's called managing risk. We don't allow the losses to get more than 1% of total equity in the account, and we let the winners get as big as they can. But generally, I take profits around 50% of the trade. So like that put I just sold on the MES contract, if it gets in the around 50%, right here, if it gets to about 50% worth of profitability, I'll take it, because that's about 1% on total equity, according to the calculator. It was 34. Let's just call it 34. So 170. So yeah, half of that would be better than 1% on the account. Much better. So 50% of that would be great. $85. So that's more than 1% on the account, and it would be a 50% gain, which would be over here. All right, I got to put that trade out on Twitter real quick, so bear with me, because I told everybody that no matter what happened during this, I would absolutely shout the trade out. It is not too late to take this trade, because this trade could be looked at as a day trade if we get a nice move to the upside, but it's more based on a time trade. We want time to decay, and we think it will do that. We think it will do that because the market should expect the Fed to pause. All right, so post sold the 44.20 44.20 October 13th. And it's 30 days out. All right, so there you go. Twitter has been notified. Notified. What's up? Good morning, everybody. Good morning. New internet test run. No, this is not the new internet. I called Verizon yesterday and told them to quit throttling me, and they were like, no. And I was like, do it. And they said, no. And I was like, how much? Like a gangster, right? How much do you need to fix it? $20. I was like, do it. I just have to plan 100 gigabytes per month is the total for the whole hotspot unit. So I upped it to 150 gigabytes per month. By then, the new device will be here. I'll be up and running on it, and then I'll just cancel the plan altogether, because it's not a plan. I pay as I go. So I'll owe them a little bit of money, but I'll pay them, and then I'll be done with the hotspot bull crap, and we'll have actual freaking internet that works. That's all we want. Can we just get some internet, please? All right, so Bitcoin moving back up closer and closer to that resistance. It probably has something to do with the dollar dropping, but the dollar hasn't really dropped a whole lot. If we go back to this, we can see that the DXY is down, it's up still on the day, 0.10%. 0.5 is like the mean, if you will, the average of what FX pairs and currencies trade at. Right? So if you have a 0.5% move on the day up or down, that's a pretty decent move. So if you got a 1% move on Forex or any currency pair for that matter, that's a really big move. All right. So let's see here. Good morning, Heath. Can you do TA on Tesla, please? Yeah, we'll look at Tesla, TSLA. So yesterday, like I said, some news came out about them partnering up with NVIDIA or something. I could be wrong on that. I don't care too much about news, but that's what I think I heard. So Tesla opened up strong, right? People were shorting here. This was resistance. All right, you can see how on this day right here, which was last Friday, it traded right up to resistance, and I took a short. I took a short by buying a put when it ran up there, and I made a couple dollars on that trade. Nice trade. Tesla moves very fast, so be careful when buying Tesla calls or puts. All right. Also, if we pull up the moving averages, like I said, you can see that right in here, we got that downward cross, but then this big bullish move right here made it come back up. And then we traded down to it. It held as support and then set a support at 245.01. So at that point, if you would have wanted to be a buyer, you would have wanted to buy it there. Why? Because that's daily support. All right. So you got your bounce there. You tagged resistance here on Friday and closed. Then we got the news out and then you gapped up above that. That's your open there. Okay. So when you opened at 9:30, you were at 264.26. That puts you well above this high. So anybody that was short Tesla were now buyers, right? Their stops were getting triggered upon the open. That forced a little bit more buying power to come into the market. On top of that, you have people that just are always bullish Tesla, no matter what. They only look for long trades. The structure on Tesla is bullish, and you are in bullish control with a retest of the 50 right there. So this would have been the area to buy, 245.01. All right. Forget about the moving averages. Don't buy off them. Buy off price levels, objective levels. And you can see, on this day right here, would have been a good day to buy it. It opened, dropped down a little bit, but then took off. You would be sitting pretty in it right now. I don't like it as a short. Yeah, you got a level right there that could be classified as supply. This is weekly supply right there. So, if you must short Tesla, then look to short it at 276.47 upon a retest. All right. But you are in bullish control on the weekly, and you are in bullish control on the daily with the moving averages and with the RSI. On the weekly, moving averages and the RSI. So if any reason, and the pull, this did it already, right? As it got so far away from the 21 EMA is considered the mean. So when price gets really far from it, typically people will start to look for shorts for that pullback or that reversion to the mean trade or mean reversion trade, whatever. It's the same thing. So now you're getting a bullish, after that pullback, you're getting a bullish, pretty much gap and go, right? Each one of these days gapped up, closed up, or weeks, sorry. Gapped up, closed up. Well, that's not really a gap up. It's actually a gap down. Gap up, close up for the last 4 weeks. So I'm not prone to want to short things like that. However, yesterday it did test weekly supply, and then that's daily res. So these are the two areas where you could look for shorts. That wick would be where I would put my stop. Now, I'm not saying that you should, obviously, because you are taking a reverse trend trade. The trend is up. If you want to short something, short Bitcoin because the trend is down, right? It went from up to down. The trend changed with this candle, right? It broke through the 21. The 21 was pointed up. Every test of the 21 in this bullish run was successful. This was the first failure. So yes, this is a bullish engulfing at the 200 on the weekly. It's a 200 exponential, but it's still just another lower high. There's your high. This is a much lower high. And we even put in a lower low. So if Bitcoin just closes under 25,831.76 today, you will have a bearish engulfing candle. So keep that in mind. If this closes bearish, people are literally going to be selling the hell out of it. But we still got time. The market's not opened yet, so we still got a little bit of time. And it does look like it's rejecting. It's rejecting this old resistance. So if we pull up the SVP, also the volume profile, session profile, or session volume profile, you can see that there's a lot of activity happening up here. See this node? These three nodes right here, they range from 26,158 to 26,220. A lot of volume piling in here. There's more buying than selling. Yellow is the sells, blue is the buys. So we could pull the values up and see if there really is more buying than selling. And no, I mean, it's close, right? You got 2.581K bid versus 2.317K ask. As of right now, there is more bids hitting the tape than asks. So more buyers than sellers. But that could be a problem if you have more buying happening up here than selling, and price starts to fall away because it'll start triggering stops, which will give it more selling pressure. 26,241 or 26,276. It's like a $20 move right there. It's not much. Bitcoin's barely up on the day. It had a good day yesterday. Yesterday it was up at one point during the day. It was up like 4.5%. So it had a really good day yesterday. But it's not, I mean, this is not bullish continuation. It is bullish, but you don't have the continuation. Continuation being that you're not making higher highs and higher lows, right? You've just traded right back up to resistance. So if this is a selling opportunity, right, then we would expect price to stay under 26,276. If price gets above that, then you can probably look for this high to get taken out. But as far as the structure on the overall daily chart goes, this is a selling event or a selling opportunity, not a buying opportunity. That 21 exponential just sitting right there where price currently is. That's why price is struggling to even get back up to resistance. Algos will sell off the 21. And I mean, if you just look at past price action for like since the breakdown, every spike up has been a selling opportunity. Every single one. This one, why not this one? Why would this one be any different? Whoa, because it took out the lows. He's the equal lows down there. Yeah, so it liquidated the lows and got a bullish push. Sell it. I can't sell it down here, though. I need to sell it up there because then I'll know I'm wrong, right? I can sell it with a small enough position size to where I can get that stop all the way above that wick. Or if it does start to make a beeline towards that wick, just wait until you take out that wick and then see what happens. S&P 500 starting to roll over too, which won't bode so well for that put. However, it's testing the VWAP from the top side. So let's put in a bid real quick and just see what happens with it. Let it keep pushing. All right, we'll buy it here. That's one contract, so not, it's a small position, but it's just let it wick through it a little bit. But we definitely want to see that 5-minute candle hold. If it doesn't hold, then we may have a down day on our hands today, and that sold put might have to be closed for a loss. But we'll see. We are 15 minutes out to market open, baby. And you can guarantee there's going to be some volume today at the open. So it's hard. It's difficult to assess the news. It just is, right? How do you assess this? Well, this isn't bullish. It's bullish for the dollar, but it's not bullish for risk because your headline CPI number is going up. But that's because of oil. But your core is good. You went from 4.7 down to 4.3. So that's good. That's really, really good. So that means we've had, 3 consecutive months of lower core. Yeah. 4. Actually, you can say you've been making lower, but up in here it's just super high. 1, 2, 3, 4, 5 consecutive months of lower core, which is the one that the Fed is most worried about. The Fed is not worried about the headline number because they know that gas and oil, or oil and food is in that, and oil and food are very volatile. So we'll see if we get a bounce here based on the intraday 5-minute VWAP. It's pretty much trading inversely to the dollar. The dollar traded down and now it's right back up to what trading or whatever this platform, TOS, considers the open of the day, 820 on the DXY. I do not know why they do that. So I mean, even though we've traded back up to this, it's still okay. It's not something to be afraid of yet. It's if you start closing 5-minute candles above that, because that's your opening price. That's just, I mean, it's been retested twice though. This candle tested the open, this candle tested the open. So coming back doesn't look great. But if we can scalp 2 or 3 points out of this trade, we'll do that. As I think it's $1.50 per tick. There's 4 ticks per point. I think that's the math. You can see it just goes 409.25, 409.0, 409.25, 409.50, 409.75. and then 410. So that's a point. That's 1 point. But our entry is setting at 409.50. 409.50. Bitcoin's still moving to the downside. Bitcoin hasn't been trading with the dollar, so I mean, but it is today. Obviously, if the dollar is going to continue higher and Bitcoin's going to roll over, you could say that they're trading inversely today, but Bitcoin's currently trading down, not up. So on the NQ, you got to close under the VWAP, but you can get closes under, and then it just stay there for a little bit. The open's gonna happen in 15 minutes, 13 minutes or so. So we'll remember this is the area we were watching. Probably should have waited for a test of that before getting in. So we'll set our stop loss at 2 points. Oh, 407.50. Sell to close. Stop market 407.50. That's really close to price, but I don't want to lose too much, right? Because that short put is also going to lose if price continues to trade lower today. I think with that really good number on core, price should probably go up, unless it's concerned about oil just going to the moon. But oil is heavily manipulated by the people that control supply and demand. So, yeah, I think overall, though, that's good news because the Fed will more than likely pause instead of hiking, and that should be bullish for risk. Do you see a trade? I don't, because the dollar, right? Yesterday we took a trade on it, and it's probably stopped us out. I know you asked that question already. Just if you want to trade it, man, watch the yearly open. Okay? Watch this area down in here. I mean, this candle technically would be demand. Right? But I don't know if I'd buy it because you got such a deep test under it. And the asset is broken down. I mean, we got a nice run off the yearly open here. Nice little run off the yearly open there. And then we traded up. Right? Had a pullback, which is healthy. And then we traded up. So that's bullish. And then all of a sudden, it just came down. Had one pullback and then down. So literally, it's retraced this move up in more time, but still. I mean, you had a nice trend going to the upside, and this is what it looks like now. All your moving averages, including the 200, are pointed either straight to down. So if this is just a bear trap, then buy 107.269 or 106.994. Remember, on FX, only ever risk 1% per trade. That's on the euro. What's up, everybody? Says Fabio. What's up? The daily RSI on Bitcoin is showing higher low while price is going lower. Super Justice meow. Maybe we might get a decent bounce before going lower. Same on Mara or Riot. Well, we had a short call on Mara. We closed that position out for a 60% gain. On this day right here, we sold the $15 strike call. And on this day right here, we closed that call out for a 60% return. Nice. It's structured like Bitcoin, man. It's bearish, right? You're under the 50. Bitcoin is under the 50. So, yes, you are correct in pointing out that there is bullish divergence going on, right? Because price is going lower as the RSI is going up. But you could consider that divergence played out on a test of the 50. That's how I usually do it, right? Whenever the divergence goes up, you get a slight move up. It takes up to the 50 and then bleh. We know that there's more outflows happening in Bitcoin right now than inflows. Outflows is bearish. It's not bullish. Inflows is bullish. And volume on exchange is at a 5-year low. Volume on exchange, and that's not just one exchange, that's all of them, is at a 5-year low. So there's just not many people jumping on the Bitcoin bandwagon right now. And that's typical. It's always typical after you have a huge bear market and then you trade sideways forever. This was the pandemic, so this is an outlier. All right, this is an outlier event, but it did drop 50%. So, yeah. But remember what happened here. The Fed called an emergency meeting and said that we are going to drop interest rates and we are going to start buying assets. So that put a support under the market. That's why the down move was so fast and then the up move came shortly after, right? You can even go back in time and look at it here, right? This is the reason why the Fed called an emergency market or an emergency meeting, and then they just put a bid under the marketplace and left it like that forever. This is when they changed their plan, right? They took a 180-degree turn. Now we're going to sell assets to get our balance sheet straightened up a little bit, and we're going to start hiking interest rates. And they did the most vicious interest rate hike that we've seen in a long time. So the S&P 500 trade is up pretty decent there. We're going to let him run. The open is going to cause some volatility, so I might get stopped out. So what I might do is let it run to 929, go ahead, close the trade, and then hope for another retest. Or I could just put this up about a point or 2 points into profit, so that way I can't lose money. But this is very if you get a lot of volatility, this will get stopped out even if the candle doesn't touch it. It's just the way it works, guys. The spreads open up when volatility happens, and on the open there's going to be volatility. When I trade futures, I usually try to make 1% of the total equity in the account, and then I'm done for the day on futures. I still play with options and stuff like that throughout the day and do, trade. If I find a trade, I'll trade. But if I can make, 1% on total equity in the futures, then I'll stop, right? Because it just makes consistent returns. And basically the way to grow an account is to make small, consistent returns over time, consistently. Now, I have done this for my private group, and I will do it for you guys as well. You guys should know that I am very transparent. So I'm going to show you that this is profits. So if you can see right here, anytime there's money movement, it's written in white, and you can see the word ACH deposit. And if you look over here, that's $5,000. That's what I deposited into the account. So what a lot of traders will do on YouTube is like if they get in the red, they'll buy more, right? To make it look like, or they'll just put more money in to make it look like they're profitable or whatnot. So what I want you to look for is I want you to look for ACH deposit, because this is real account. It's not fake, right? So there's regulatory fee adjustment. We'll just scroll up. Regulatory fee adjustment, 7 cents. That's not me, that's them. All right, they're taking 7 cents out of the account. Regulatory fee adjustment. Regulatory fee adjustment. What we're looking for is ACH deposit. Interest on credit balance, 4 cents. Regulatory fee adjustment. Regulatory fee adjustment, 4 cents. Oh, regulatory fee adjustment, 4 cents. Regulatory fee adjustment, 9 cents. And then here we are today, September 13th. So that proves that the account is up, profitable. This is the fees that's been taken out of the account. And then that's my, what you would call liquidity, or what I've made. So the account is up, literally, if you minus those fees, over 20%. It's like 24%. But we got to count the fees because they come out of the P&L. All right. So I've paid almost over $500 in fees since I've had the account. But it's okay because it's up. You have to worry about fees if you're not profitable, because not only will you be losing money because of bad trades, you will also lose money based on fees. So we want to see if this thing gets stopped out. It will be for a tiny, tiny profit. What I am hoping is that it just goes up. Here is the dollar. You can see that it had a nice down move after testing what Thinkorswim calls the open on the DXY. And we've tested the purple dotted line is the VWAP, intraday VWAP, volume weighted average price. So if we can get the S&P 500 to start getting its move to the upside, will be nice. We're almost at where I would consider taking profits anyway, right? So since the account is up 5,900, or it's up $900, but that means the account's got $5,976. Now we're at about 1%, right? 1% profit on the day. We can go ahead and close this trade out. But it's moving in our direction, so let's just give it a second, right? Because small, consistent gains are great, and that's what you want to aim for. But, oh wait, that's my entry. But if you can nail them home run trades too, those are fantastic. So we also have a short put for any new person that's just signing on. We took a short put. I posted it on Twitter. We shorted the 4420 put on the micro ES mini contract, which is the S&P 500 micros. All right, so what we're expecting a bullish day. Okay, live funds, small account. I'm just showing you guys that it is possible to grow a small account. Depending on what you make at work or how much you need to make on a weekly basis, you probably won't be able to do that with a $5,000 account, but you can definitely make $50 a day on a small account, and that'll add up quickly over time. All right, so we're 2 times our typical what we would be looking for profits. So we just keep moving this baby up. Because I've only got one contract. If I had two contracts, I would definitely close the other one out. Or let's just do this. Since we have the short put, let's just close it down. All right, let's just close it down because we're up nicely. We're up 2% on the day. So we'll review. Sell to close, 1 at limit, 54.24. Always make sure this price is that price. I'll always do that. 45.25, and this is, so we'll review. We'll just send it, and then it put the limit right above price. So spike up, take me out. Or I can move this too if I have to. But, oh, damn it. I thought I was going to get filled there. No bueno. Bitcoin's getting a pretty decent bounce. Dollar's going down, so we should be fine here. It's very volatile. Pretty sure we're nowhere near hitting the high of day. Well, I mean, sorry, not the high of day, but the range, expected range high. So 44.96 on this CFD product. Expected move today is $27. So we didn't hit the range low or the range high. So this would be like where I would expect price to go. There's also daily res up there based on the good news, but we don't know how the market's going to take news. We don't know how the market's going to digest the news. Does the market like the news? Does it not like the news? We don't know. That's why we want to take profits. Go ahead and get this done, because if the market continues, we will make money on the short put. Go on up there. I don't want to go out on market because market will give you a terrible fill. I've done a market stop before and I've lost as much as 3 or 4 ticks. There we go. We're out. Day is done, right? We don't have to do anything else. We hit our goal times 2. All right, so back over here to positions. Let's see what's up over here. So the XLF, the financial, is moving to the upside. So we're losing money here. This MES is that short put, right? There's the short put. So it's still open and moving. As long as price continues up on the day, this will make money. Our goal is roughly $80 on that trade. Trade was posted on Twitter. If you don't follow me on Twitter, follow me on Twitter. All right. What's up, everybody? Yep. Good morning. My friend told me it's gay to run the Bitget long. What? The Bitget longer than 5 seconds. I don't know what you're saying, man. Great trade. Thank you very much, Eric. Yeah. It's good when you can get, make good trades live on stream, but it's also better that I show you the fact that, it's actually a profitable account and yada, 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 because you definitely need that in this world, right? You don't know who to follow. You don't know who makes money, who don't, right? Because a lot of people do make money, but they're making YouTube money. They're not making trade money, right? Like the biggest guy out there, he will not show his trading history. He will not enter any competitions. So you just have to believe that he's profitable. This way, you don't have to believe me. You can see it for your own eyes. Right? Which is fantastic. That's the way that it should be done. So transparency is the key. If you want to follow profitable traders, listen to what they say. copy their strategies or whatnot, you should make sure they're profitable. At least it doesn't matter if it's a big account or a small account, because if you can make money even on a demo account, but demos get a little bit shady because you can change that. You can change a demo. But with, real money funds, real money, everything it's all logged. I get the emails every trade I take. I get emails from Tasty. I mean, it's good to go. But we do want to see the market continue to move up. As I said earlier, with good news, we should take out the CPI high. And if we do take out that CPI high, that short put will pay us. It'll pay us good. And the reason I put it so far down there was, well, you could have a very, very big bearish day on something like today, right? Now we have the FOMC next week. Here, let me do this. Let me go into filters and close down everything. So we can absolutely check the date of the FOMC. And on that day, wait. I gotta at least leave the US up there, right? Dummy. All right, that's good. Now we can apply that. And then we go to next week. We got building permits on Tuesday, Wednesday, interest rate projections, and then interest rate decision. That is your FOMC right there, 2 o'clock. It doesn't have the speech, though. Why doesn't it have the speech? Wednesday, September 20. September 20. So that's the FOMC date. There will be a speech. It's just not on the economic calendar for some reason. But green on the markets, pretty much all of them. RTY. I'm pretty sure the data is jacked up on this as well. Yeah, it's 15 minutes delayed. But we can just simply go to the IWM. It's not delayed. Let's see what it's doing. The IWM is the Russell. It's down on the day, but it did gap up. Bitcoin moving back up towards that resistance area. So I like to sell Bitcoin, but at the same time, with good news, it might not be a great idea. We'll keep our eyes on it. If it fails at resistance again, then we may take a shot at it. But the dollar is very, very weak. Well, no, it's not. It's up 0.08%. It just moved up to that monthly res and rejected. And we've got a lower hourly low, but it's not really as volatile as I thought it would be. I thought it would be just straight down like that. But the day just started too. The day just started. What's up, everybody? Yeah. All right. Does anybody got any questions? Assets you want me to look at? Potential trades? If you find something that we can trade today, we'll trade it. Let's go look at the XLF again. See why it's not cooperating with us. Oh, it is a little bit. It gapped up, but I want to see this thing continue to move lower, obviously, because I am in a put spread. We want those put spreads to work out. but it had a really good day. And the day that it had that, and see, I don't know what you want me to do with it. You're just showing me a position that you're filled on. So I'll look at it, but I mean, yeah, you probably bought it because these are the ones you like to buy. Medical Properties Trust, Inc. You're building a long position. Gotcha. All right. So, yeah, I mean, maybe it works, maybe it don't. The chart does not look good. It is bearish. Bearish. This is healthcare. We actually have XLV call on that. So we would like, what is that? We would like to see this move down. So I'll watch it. That call is there. That's the one. Something. Wait a minute. Did we sell a call on it? Yeah. XLV. Yeah, we sold the October 13th 135 call. Price is really close to that 135. That's the 135 call. That's a little close. So if it closes higher than it did, higher than yesterday's open, I will be closing that trade out for a small loss. Do you have a video explaining options or how to use them? Right now there's 3 videos out, 3 or 4, and they're in a playlist. I'm going to make more. It's just not a lot of people are interested in them, but I'm still going to make them. But I was told by a specific person that they still don't know jack about them. Like after watching 4 videos, they still don't know nothing. So I guess I need to go from the very, very basics and define every single term because there's so much to learn when it comes to options. But once you understand what they are, how to use them, you can make money, right? You can set up non-directional bias trades, which mean you don't care which way price goes and still get paid, right? That's what I love about options. You can hedge positions, like say you're long Apple and you don't necessarily want to close out the trade because you're up in nice profits. So you could buy a put, right? You could just simply go out there and buy an out of the money long dated put to cover for any potential losses that may sustain in the future. I had a conversation with one of the members inside the Discord the other day about this exact thing. They bought Apple at the yearly open and they don't want to lose their, profits. And I told them basically to cut the position in half, take profits, and then wait for a pullback or wait to see if we're going to have a recession because that's still on the horizon. Up to the highs was a 52% move. So instead of cutting the position in half, you could take, I don't know, 10% of whatever you got in Apple and use that money to buy puts. Because the way puts work is their prices, the premiums will expand with implied volatility expanding and with price moving lower. Those puts will pay you. So any losses sustained in the actual down move, had you bought puts, up in here somewhere around 193, those puts would be in a lot of profit right now. So you can hedge your long positions with options. You don't have to be long stock. That's what are so good about options. You don't have to be long stock, any stock. When you buy a call, you are potentially buying 100 shares of that underlying. Underlying meaning stock, index, product, futures, whatever, whatever you buy. But one call gives you 100 shares. Two calls gives you 200 shares. So if you want to short 200 shares of Apple, you would just buy 2 puts at the money or in the money. If you think Apple's going to continue to roll over. They did have bad news. China, I guess, is banning all, I think it's every federal employee. Like if you work for the government, you're not allowed to have iPhones in China. That's why we got such a massive gap down. But then they did the unveiling of the new iPhone yesterday. And yesterday it sold off. So I don't know what that's about. Usually when the new iPhones come out, price reacts a little bit better than that. But it could still just be the China news that's kind of bombed Apple out a little bit. Apple is a huge part of the S&P 500. Nothing's really super green today. I mean, the market looks a little bit mixed. Let's go get the advanced decline line and see how it's going. We'll look at the S&P 100 so everything fits on one screen. So we're pretty much mixed on the day. You got 57 stocks advancing, whereas you got 54 stocks declining. 44 stocks declining. 57, 44. So it's a little bit more geared towards bullishness because 57 are advancing and 44 are declining. So the S&P 500 can go up or down. The big tech names, that's what we want to look at usually. Like they're being called the Magnificent Seven on the street or on the news. That's Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And Google's down and Apple's down. The rest are up. Tesla's up 2%. Nvidia's up 1.1%. Microsoft almost up 1%. Meta up 1.4%. Google's just down 0.18%, so it's not down big. In fact, the candle is bullish, but because it gapped down from yesterday's close, it's still down, and it will be down until it gets to yesterday's close, which is 135.34. So once we get to 135.34, this will no longer be red over here. And then, of course, we just looked at Apple. It's trying to take out yesterday's lows. So Apple moving down like this could be a problem for the S&P 500, but at least the other 4 are good. But to see like a real bullish move on the S&Ps, we would want to see all of these be up, positive percentages. But yeah, I do have that. USD JPY been testing daily support so far. All right, let's go look at USD JPY. Daily res. Daily support. It's getting close to where they intervened last time. I don't know if they'll intervene again, but it's been said that they probably will. It is struggling. It is struggling though. Because this was a breakout above quarterly res, which is a big level, a retest of it, and it just couldn't really get any bullish momentum going. It got a breakout here, but then it was sold off, and then it hit back down to test the quarterly res again as support. Then you got your bullish continuation, your breakout. However, you're just not getting that continuation. In fact, this closed above that close, so this looks more like a trap setup, almost like it's looking for another retest of that quarterly res. It's very bullish structure-wise. So, if you're shorting USD JPY, you're simply shorting it, hoping to find the top. I'm not a U.S. resident. Shh. 75% of their clients are net short. And by their, I mean the broker IG. All right. IG posts their, they call it, sentiment. So 75% is net short. That's retail. Whenever you see such a high percentage of clients being short or long, then you typically want to take the opposite side of the trade. So I would be looking to buy support. Now I am in a short position that I've had on since this high was made, but that was taken based on the fact that we kind of knew that they were going to intervene, and also based on a dollar liquidity run. Most of the profits have already been taken out of that trade, so I'm still holding it, but it's getting killed based on the carry. That's another reason why you shouldn't be looking for shorts this, because the carry. Just people buy this just to hold on to it for the carry trade. They're gonna generate a positive yield because we're at 5.5% interest rates and the Japanese yen is at 0.10 interest rates. Negative 0.10. That's called a carry. And you can generate alpha just by that carry. That's usually why, there's billions of dollars put on in these positions, and it takes a long time for that to happen, but it did have a nice solid move down. We did cover all that. We were short at the top, so the carry trade is that, and weakness on the yen has got this thing back to being up around the highs. So I don't know if I would take a short on it because 75% of retail loses money. And if they're all long, if they're all short, then I can definitely see this thing breaking out and making another run up to that 150 level. All right. 2-1 on USD just below daily res. Old daily support, look left. Oh, I got you. Long USD JPY, not short. Good job. Have you shifted your focus to more future and option-based trading, or are you still trading Forex? No, I still trade Forex. I'm setting in I don't know about the Euro USD. Yeah, I don't know if it got stopped out. It might have got stopped out because of that wick, but we did get long Euro USD yesterday. I am short Aussie dollar. I am short pound dollar. I am short USD JPY. I am long USD Swiss franc. Those are the positions I am currently setting in Forex. Yes, I am very active in Forex. We took a trade on Friday and we took a trade yesterday for day trades. The trade we took on Friday was a no-brainer. It was Aussie CAD. Was it? No, it was Aussie Swiss. Aussie Swiss. On Friday, we took a short. It was so bullish. Aussie was up over 1% on the day, right? And the Swiss franc, I don't remember. I know one was, no, I don't think it was this at all. What was it? What trade was that Friday? Run Mountains? Was it Aussie Swiss? Well, anyway, we took a short on it, expecting it to roll over. Based on right in here. We took it at the open right there. We just got short. And then we took profits at this white line because we expected it to roll over based on the currency strength. I think Swissy was a little bit stronger than Aussie was or something like that. Yeah, I didn't like it at first because it was moving up so rapidly. But then when I realized that the other currency was stronger, I was like, well, it should roll over. And it did. And then I don't remember exactly how many trades we took last week, but those trades that I'm sitting in, like the pound USD short, I mean, I've been sitting in them for a while, right? I shorted the pound up here around 127.58. I've just been holding on to it. And the Aussie dollar short is from this white line right there, 67394. I took the short based off of supply. So when we tagged that level, I got short. And I've been holding it ever since. I've already taken profits on all of those trades. The Euro Swiss trade, I have not taken profits on because I opened it with like a quarter size position. It wasn't a full position because I didn't like it at the time because it's in a downtrend. So we took it, and so far it's been working out. It's just the last 5 days it hasn't went anywhere. Today we made a fresh high. All right, let's go look at Walmart real quick because someone just texted me. No, see, I shorted Walmart twice. Once down here, took a loss, and then up here, took a loss. So they want to short this with a bearish in-out spread. No, not happening. This is at all-time highs. Let's go look at the premiums on it, though. Let's see if it's sexy enough. We'll go trade it. Table. October 20. So 37 days out. Well, he called it wrong. It's not in the money. 165 put is not in the money. But it's a $5 wide spread. You buy this put, sell that put, and the max profit 377, max loss 123. So it has a good risk to reward, but I wouldn't allow the max loss to get to 123. I would close it at $59, as that's 1%. But it's been on a run, man. It's what makes it difficult to literally want to even take it. You're at all-time highs, and since you broke out from all-time highs, you broke out yesterday, right? And then today, or not yesterday, the day before yesterday, you took out the high. Then the next day you opened, traded lower, and then up, closed above the high. Today you're seeing bullish continuation. I would wait before I would take this short, just simply because you're getting bullish continuation for the last 2 days after taking out the all-time high. Oh, these are monthly candles. Sorry, Jesus. Idiot. Yeah. So there was your all-time high. Like I said, you made a new all-time high. You pulled back, but then you broke back out. Here's the breakout. And then there's 1, 2, 3, 4 bullish days of continuation. But it does have a good risk to reward, and all you need it to pull back to in order to make money is 160, which is support. So basically it's a $5 wide spread. You're buying the 165 put, you're selling the 160 put to basically manage your risk. It's a risk-defined trade. But this thing could test the open today and go higher. I had a bearish position on target that I closed for 60% profit because it's trending down, right? That's the difference. When you take bearish positions on things that are up, sometimes you'll get lucky, right? But that's a wide spread. If you could do a $2.75 wide spread, that would be a little bit more attractive in my opinion. $5 wide is huge. That's why you can make up to $370. See, all you can make on the spread is the spread minus the premium paid. So the premium you're paying is $1.29. So you take $1.29 and you subtract that from $5. And that would be your profit. So max profit is $370 on this trade. Max loss $129. So it's better than a 2-to-1 risk to reward. But like I said, how much buying power would it take? $129 worth of buying power. I guess we can put it on and see what happens. So, yeah, buying the 160 or the 165, sorry, selling the 160. And if it continues up, then I'll just close it out for a small loss. I won't get filled at that price if it continues to drop. I mean, that was a nice big move to the upside. So it probably needs to come back up to 165.28 before I'll get filled. But I'm taking it. We'll see what happens. It'll be my third attempt on Walmart to short it. Damn, this thing is bullish. I mean, you're broken out and you're getting continuation. That's not typically something you want to short. It's not even printing divergence either. I mean, it kind of is, but not really. No, it's not. So from this high, it's because it closed. So we'll go from this high. I guess you could call that divergence because no, you can't. You're higher. Price is higher and so is the oscillator. It's not bearish div. You don't even have bearish div on it yet. It's a fresh breakout and a fresh run. Yes, it was Aussie Swiss, but you didn't like it at first. Yep, because the Aussie dollar was strong. Yeah, but we won the trade and it has since done nothing. Yeah. Yeah, Swissy trades don't really do much. They don't do much. Swissy likes to chop sideways. I mean, yeah. I think at the point in time, Swissy was stronger than Aussie, and that's why we went ahead and took it. But yeah, since then it has weakened and it's made fresh lows. It was the most bullish currency that we had. Or no, the pound was. But all of them are pulling back because the DXY got a nice run. I mean, 6, 7 weeks in a row, 8 weeks in a row up. 1, 2, 3, 4, 5, 6, 7, 8. On the 9th week, it's pulling back. But it's not really pulling back big. It hasn't even tested last week's open yet. So where are we on the S&P 500? We're down on the day. Jesus. What is wrong? So the market might decide to not like the news after all, huh? I don't know why it wouldn't. It's that support. Let me put the support there. All right, any other questions? And we'll wrap this thing up, seeing how people are dropping off pretty quickly. Bitcoin, I mean, if it gives us an entry opportunity, I'll take it, but it hasn't done anything since 8 o'clock, 8:45. The rest of the time, it's just been sideways. Yeah, just been sideways. What's it look like on the hourly? Yeah, that's a good down move, but you still haven't taken out that low. And then your low of day is going to be right there. So you got a long ways to go to take out today's low. So this is what we'll do on Bitcoin after the stream is watch 26,195.04, and we don't want to see 1 hour close above that. If we get a retest of that and then a failure, we'll short it 26,195. That was the retest of it right there. So we might not get another retest of it. But if you close an hourly above it, then you don't short it, you leave it alone. Or if you did short it based on just the tag of that level, you would want to close that position. Because if it takes that out on an hourly close, it's probably going to take out resistance as well. And then this will just look like a pullback. S&P 500 getting a huge move down. So kind of like in that Walmart trade, if the S&P pukes. If the S&P pukes, we will have to close out that short put that we took this morning. It's still working, but would you close? Let me see. Yeah. Let's just close it and try to fill it a little bit lower. All right, so we want to buy this one. We want to sell that one. 137. Whew. Yeah, under 129 looks more attractive than 137. But it's because it's moving down. So I'll give it a little bit of time. If it gets a spike up, I'll try to fill it for cheaper than 137. It's still a 2-to-1 risk to reward. I mean, you're risking $137 to make potentially 363. But price has to get all the way down to 160. So it's got to get under this line down here in order to make maximum profitability. A Bitget shoots water out of the toilet to... Oh, gotcha. A bidet. I'm calling it a Bitget. I'm such an idiot. A bidet. Yeah, I got you now. You got to travel more. Yeah. Yeah, a bidet. Gotcha. Completely following you now. Thank you for clarifying that. I can always count on you to clarify stuff like that. You rock, dude. Don't ever change, bro. Don't ever change. All right, so yeah, we're just waiting to see what happens with that. Let's go back to charts, see what happened. We lost the VWAP. I don't know, lads. The market is testing the area that we was wanting it to retest, which was yesterday's low. So we can see if yesterday's lows hold. But I really expected more volatility than what we were getting here. And to be honest with you, I really expected the market to go up. The dollar's got a W formation going on here. These are looked at for potential bullishness, as it's considered a double bottom. But it's just intraday, and I don't use patterns to make trading decisions. The dollar's just been straight bullish AF for a while. But we didn't really get that massive pullback on the SPOOs. But we may get it now. So basically, if we take this low out right here, then we're probably going to be looking for a retest of 43.74. But what would that be on the actual MS? This low right here is 44.82 spot 50. So if we take out 44.82 spot 50, we would be looking for a next retest of daily support, which was put in at 4432 spot 75. Those are your numbers. 4435 spot 75. Wait, it's 4432 spot 75. This is an area where I said this morning we could potentially see support. I don't know if it will. But if it does hold support here, then we can look for the S&Ps to move on up. Maybe make a fresh daily high. It's 10:14, so it's not quite 11 o'clock. At 11 o'clock, there's like a 68% chance the high or low of day is in. So at 11, we'll know more. Tesla's given back all of its gains today, and it's going down. So we go look at the Magnificent Seven and see how many of them now have lost. 3 of them now are red. Nvidia is barely up. Look at that. Retested. Supply, baby. Like, it don't get no prettier than that. Boom. Take a short, get paid. Or buy a put, get paid. These puts move around so fast, though. It don't take long to either lose a lot of money or make a lot of money. But that was a pretty much, like, that was beautiful the way it closed and then started to run down. So if you would have taken it on the test of supply, would have been a beautiful short. As that's 455, you're already down to 448. So you made $7 on the trade already. That's a $700 gain on 100 shares. That is if the gamma is for a full buck. But still, I mean, nice trade. These things move quick. Be very careful trading these fast-moving options. What do you think of Disney short for a day trade short or a swing trade short? I like Disney lower. The problem with Disney is that it's been going lower for a while. So actually, I like it. You've gotten a retest of resistance and you're failing. Yesterday, you tagged resistance, you failed. Today, you're failing at yesterday's close. So intraday, yesterday's close is where I'd be watching for potential short entries. Stop above 84.40 for a swing trade. For a day trade, your stop would just be right there. So what I would do if it gets a bullish candle and passes through the level, I would wait for it to drop back under the level before taking the short. Because you could run above the day's high, right? And then drop. So that's that. But yeah, I like it because Disney's crap right now. It just is. The markets are punishing the bearish stocks, and they're basically just keeping bullish stocks bullish. But we may see some capital rotations going on because there may be, signs of the recession. A lot more people are starting to jump on board that we are going to see a recession, and typically in a recession, everything suffers. I can turn. Where is my recession indicator? Man, there it is, right there. All right, so this is your recession indicator. Typically, anytime you get a recession, most stocks get killed, right? But some of them are already killed. Like Disney, for instance, it's already killed. So how much kilder can it get? But I mean, yeah, I like it today lower. If I had enough buying power, I'd probably sell calls on it, as that's the safest way to do it. So let's go look. We got $2,000 worth of buying power. Positions. See, that short put is actually killing the profit that we made today. Yeah. We was up in the $90, $100 range, so we've already dropped $40 off of that short put. So, like I said, I mean, if you don't trust it, if you don't like it, if you don't want to take a loss, you can absolutely change it just by closing the trade out, right? But it's for time. It's to allow today to let the market decide what it wants to do today. Tomorrow it may get completely and totally reversed. Whatever happens today, tomorrow could yeah. So let's go out 30 days. There's premium out here. And I could do it technically, because it requires 1,100 in buying power. That would make my buying power less than $1,000, and I don't like to do that. Yeah, I kind of like the idea of short Disney, guys. But this could also be the low. I wouldn't bank on it being the low, but it could be the low. Yeah, as long as it stays closing dailies under the 21, I like it lower. I mean, obviously here it didn't, so I wouldn't have been looking to short it until it got back under it. And you're still under it. So the day's range has already been put in, and it's a small range. It's an inside day. You're trading inside yesterday's range. So, I mean, shorting Disney up here would have been the best bet. 83.68. So just keep watching 83.68. If it gets up there and rejects, look for the short. But keep your stops tight, and remember, only risk 1%. 1%. If these tech stocks catch a bid, the S&P 500 will go right back up. Thoughts on bots for a long BOTZ? It's not looking great. Here's the thing. It looks like this is just an ETF on AI. So obviously it was doing good when the AI boom was happening, but one could argue that there's a top been put in on this in the form of a head and shoulders. There's your shoulder, there's your head, there's your shoulder. It's not the prettiest head and shoulders ever. And I'm not a pattern trader, so I don't care, but that's also what we call a local top, right? When you put in a top and then you take out the low of the top candle, that's a local top. And then if supply holds, which it did, you didn't even test supply, but you did test the low of this candle. On this day, you opened right there at 29.72 and see ya. Yeah, I don't know if I would long into this much bearishness. This was a perfect opportunity for a short. All right. So like when price is trending above the RSI's 50, which is why it's a line on my chart, that's when you want to look to be a buyer of stocks. Okay. Once you break that 50 and you get down into bearish territory, you look to short retests of the 50. So what we would have done on this is we broke above the 21 here. That was your highest daily closing, bullish candle. So we'd mark a line there. And 26.83 is where we would have been looking to short via my strategy, right? And that's a trade I would take 100 times out of 100. Every single time I would take that trade. So, I mean, you're trying to or wanting to buy it because you're wanting the AI boom to continue. Like, essentially. But like I said, there's a little bit of price action here that suggests that that boom might be over. I mean, look at Apple. Apple uses AI. Amazon is the best one out that looks right now out of all of them. Meta had a drop, but it's back up into bullish territory. Microsoft was bearish. It's back up into bullish territory. However, Microsoft is looking weak here. If Microsoft can't break out in the next, 4 days or so, then I would be looking for this to potentially break down. Nvidia, you've lost your bullish move. You've lost it. That's why I said, man, could have been looking at that 455.25 spot for a short on an intraday basis. And it was a beauty. I mean, it hit that level with fierceness and then instantly reversed. We don't pay attention to moving averages and the RSI intraday, but I'm just saying. So no, I don't like it for a buy. Bots, BOTZ. Nope. I would wait for it to pull back again, and then I would short it. Although there's not much liquidity in this stock. When you see gaps like this intraday, I mean, that's a tick, 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 tick. It barely moves. It barely moves. From low 25.65 to high is what, 35 cents? So it's a barely moving asset as it is, but it just set in a top. This was the first opportunity to short it, and a beautiful one at that. So wait for another opportunity to get short or buy puts on it. Is this even tradable? I mean, does it have... It doesn't have weeklies, so I don't like it. I wouldn't... To be honest, the bid-ask spread is not that wide, but there's no open interest in this thing at all. Like, here's your open interest. This column. There's 3 people interested, 13 people interested here, 37 interested there, but there's more interest on the call side because people are doing they're looking at it as a bullish opportunity. But to be honest with you, I mean, there's an 11% chance that this will be in the money at the time of the expiration. So when you take trades using options, we like to get this up, right? We want it to be higher than 50%. Higher than 50% chance that we're going to make money on the trade. 11% chance that you're going to make a penny or more on this trade. And 147 people opened it. The spread is wide. It's 10 cents wide. I mean, it's cheap. It's a good way to manage money because you know your risk. If you buy this, you might get filled on the midpoint. I doubt it. But even if you get filled on the ask, you're only risking $15 to potentially make $125. Well, $115, sorry. You buy on the ask, you sell on the bid. So this is what you could potentially make if the stock makes a $3 move in 37 days. And the implied volatility says no, it will not make a $3 move in 27 days. It says it will make a $1.27 move in 27 days. So once again, you got a very small chance of making money on it. However, it is like very manageable. The risk is very negligible to take a shot on it. You could risk $15 to take the shot. That's the only way I would trade it. I wouldn't buy the outright shares because I could just, buy the 28 strike call and forget about it. The worst you can lose is 15 cents or $15. So this is back up 16 on the day. So the SPOOs bounce. So if you want to buy it, do it like that's the way I would do it, my friend. Yeah, it bounced right where we wanted to see it bounce, which was at yesterday's close. But you're right back into the volume weighted average price. So today could be a choppy range bound day. Choppy range bound day. The dollar is all the way back up to the open. The NQ's doing good. Oh, we'll see how it plays out. I scalped that little drop, but I like your idea. If it tests resistance again, I'll enter. Awesome. Perfect. Thanks. He says, Andrew, you're welcome. USD JPY long looking good, heading towards the take profit. The XY moving up. 6J1 weakest currency on the day. Yeah, which is the Japanese yen. Old Rope 63 says afternoon. It's 10:30 here, my friend. But afternoon to you, sir. Afternoon. Euro USD, yeah, it's looking like it's starting to lose its luster, which would be good for these shorts that I'm already setting in, obviously. We made a fresh yearly low on this, and then it's just been sideways at the lows for a while. So this may be getting ready to make another run to the downside. If it does, that's going to have me a little bit more skeptical on bullish positions on the S&P 500. I'll just be honest with you. Because the Aussie dollar is looked at as a risk-on currency. So if it's getting killed on the year, it's not typically good. But, I mean, if you look at the Aussie dollar's lifetime, it just gets killed. Like, it's really never been in an uptrend. So I don't see why people call it a risk-on currency. It literally does not trade inversely to the S&P 500 at all. Are you serious? That's all the spies got? Nah, that's wrong. A spy has to have more than that, but whatever. Yeah, so it looks like it could go. Last month it took out support, and now we're getting downside continuation, which is what we want to see. But the reason it's struggling here is simple. There is monthly support right there. And you can see how that monthly support is kind of like holding price. So let's rename that because it's not the yearly low. We'll rename that monthly support. All right. Any other questions? We're going to wrap this baby up. The only trade that I'm currently interested in is Walmart, and that's only if it gives me a move back to the upside. It did, but I wasn't in it. I could probably get filled on it now, but this is trying to pick a top, which is everything I stand against. It's the worst trading strategy on the face of planet Earth. Occasionally it happens, right? Occasionally you'll get lucky and hit it. For instance, a lot of people would say that's what I did on this because I shorted the very, very top. But I took the short based off of the DXY liquidating the previous week's high. And I was using this as the asset to do it, to short the dollar. And we also were hearing rumors, of course, that the Japanese yen was, or the BOJ was going to intervene. And they did, but not for very long. So good call on that long today. Yeah, it looks like it is moving back up there to take profits. Tesla's moving back up. If the Magnificent Seven continue to be strong, Apple is the only one holding the marketplace down. Because it's pretty down, pretty big down. But we'll see what this S&P 500 can do. Can it maintain any kind of bullishness today? I mean, this is garbage. The reason it's choppy like this is because of the difference in the news, right? I mean, that's not so good. That's beautiful, and that's not so good. It came in 0.1% higher than was expected, and that's based on food and oil. Oil mainly, because oil is just mooning. Not today, but it has been just straight up. So that's why we got that higher inflation tick, but that core inflation number is beautiful. 4.3%. That should have the market bullish, in my opinion. The market should be bullish based on that. But it's just, I guess we'll see what it does tomorrow and Friday, right? As then we'll know for sure what it's planning. Well, we won't know for sure, but we'll be able to better position ourselves for if it wants to go lower and make it fresh CPI low from the last CPI, then, we'll close that put out and we'll sell calls. That's what makes options so fantastic. Or you could just buy a put. When you buy a put, you almost have unlimited potential for gains. Whereas by selling calls and puts, it gives you have unlimited risk. But selling calls and puts are the higher probable trade. For instance, let's go trade this. And let's go look at where we're at. So I sold a very high delta, a 28 delta. That means there's a 24% chance that this thing will be in the money at expiration, right? So what's the probability of making money on this trade? Well, we can go look. Out of the money percentage. There's a 76% chance that we'll make money on this trade. 76% chance. See, that's much better than 11%, right? And it's also better than just the directional bias trade, because by selling a put, that doesn't necessarily mean we need the market to go up. It just means we need 44.20 to stay out of the money by expiration. That's it. Like, this in the money line can come all the way down to here, but as long as it stops there and then this expires, we will collect the entire premium. But I'll let you know what happens. Like I said, if we end up being very bearish today, watch my Twitter. When I close this trade, I'll post it on Twitter. If I close it, or when I close it, right? Whether it's for the good or the bad, I will close it, and then I will post it on Twitter, so that way you can follow me if you took the position yourself. All right, with that being said, everybody have a fantastic rest of your trading day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.